Good afternoon, everybody. We would like to welcome you to the presentation today. Before we dive in, I'd like to take a moment to congratulate the Firmenich family on all that they've achieved so far. Since 1895 to today, in January 2021, you've not only built up a successful family business, but have demonstrated a deep commitment to family unity. Your journey is really inspiring, so congratulations. Now, I'm going to ask you to imagine that you're growing a garden. Coming from Ireland, we understand better than most that for every hour of sunshine your garden enjoys, it will also have to endure an hour or so of rain, maybe even weathering a storm. Now, every good gardener knows that in order to look after your garden, you need to tend to the roots first, so that the plants produce flowers. Now, imagine that your garden is your business, and your roots are made up of your family. We are going to help them both work together to produce a healthy, thriving garden. Today we will discuss the evaluation of Firmenich and its long and short-term future. Now, our agenda consists of a brief introduction, our analysis of the company's journey so far, as well as challenges that together we can overcome. We'll recommend some key courses of action as well as some alternatives that can be explored. We'll conclude with insights as to the next steps for Firmenich. Now, please let me introduce our fantastic team. My name is Evelyn, and I speak for us all when I say we are delighted to be here today. David Byrne represents the second generation in a family business. Meanwhile, Sarah Muldoon has personal experience in the integration of non-family directors in family business. Finally, Roy Mulhern has experience in leveraged finance. These unique skills will help us work together with you to bring Firmenich into the future. Now, we have assembled a timeline of the company's key milestones from its founding in 1895 to the present day's endeavours. We can see that each milestone shows your unique innovation, adaptability and creative approach to business, something we all really admire. As you can see, we have assembled some of the key statistics concerning Firmenich. To say you have a truly global presence is indeed true. With 100% family ownership across 5 generations so far, it is such a legacy to leave. Very impressive. Core values include sustainability, your corporate social responsibility, inclusion, innovation, and crucially, resilience, which can be summarised in your purpose statement, for good, naturally. And now we're going to begin some of the analysis. What you can see here is the 3-axis model, which essentially is a lens through which we can understand both the family and the company's unique dynamics during a time such as this. Our goal is to help you align goals and sustainable growth across the axis as you work together during a challenging time. And now I'm going to pass you on to Rory to go through some of our key concerns.
Thank you, Evelyn. So when it comes to your situation at the moment, there's obviously concerns with the family and the business and the two of them interlinking. So we can see here with the family, during this hard time, we need to make sure that we maintain the family relationship. We understand the struggles and current restrictions with the COVID-19 pandemic. And with the business, we need to look at that impact and how does that affect the business. And then with the two of them in the middle, you want to make sure that the business stays 100% family owned. And we want to keep those corporate social responsibility values in place. So first, when it comes to the impact of the COVID-19 pandemic, obviously these have a very global presence across 6 of the 7 continents. We also need to make sure that we can keep these in place. When it comes to your supply chain, there's current global disruption, and we need to make sure that we can recover when the global trade does as well. And when it comes to financing, you are looking at purchasing one of your supply chains productions. Currently, there's financing markets are closed, and there's not as much financing for acquisitions in the broadly syndicated market. When it comes to family control, your relationships, and your corporate social responsibility values, we want to look first at the family. Did we see you've had the business in the family for over 125 years, and you would like to keep it this way. You want to make sure that your importance and values of your social and sustainable aspects are there. And we want to keep those CSR values in place in the company. And when it comes to the impact of restrictions on the family relationship, we need to maintain and make sure that everyone's values and visions are aligned. We need to make sure there's no breakdown of family unity that could happen due to social isolation, due to travel restrictions and COVID-19 restrictions. With these concerns, we do have some recommendations, and I'll pass you on to Dave now, who'll go through some of the alternatives and some of the recommendations.
Thank you, Rory. So we have compiled 3 different alternative recommendations for your company. The first is for a full acquisition of DRT in the present time. The second would be to keep the company as is and don't take on the acquisition of DRT. And then the third is the synergy solution. So we have put these 3 different recommendations up against a decision-making criteria. The 4 sets of criteria are: is it in the best interests of the family? Does it preserve the wealth of the family? How risky is it? And does it preserve the continuity of the business? So the first option would be a full acquisition of DRT in the present time. Now, we do not think this would be in the best interests of the family, as taking on a loan like this in quite difficult conditions currently, there's a lot of uncertainty with the COVID-19 pandemic. There is the chance that you would have to dilute your ownership if you couldn't meet the financial obligations of repaying this loan. And ultimately, 125 years you have maintained 100% family ownership with this business. This would not be in the best interests of the company. Then preservation of wealth. For similar reasons as I just discussed, we have also have this as an X. It doesn't preserve the preservation of wealth. Then riskiness, we think this is quite a risky strategy, as taking on that loan and diluting ownership would not be it wouldn't be in the best interest of your family business as a whole. And additionally, then market conditions, the uncertainty as a whole with taking on this kind of acquisition would be quite risky. Then ultimately, the continuity of the business would still go on. You may lose out and dilute ownership by a bit, but the majority ownership stake would still be within the family. Then keeping the company as is. We do think this would be in the best interests of the family, as you wouldn't have to put up that really capital intensive, there's a lot of upfront capital needed for this acquisition, and potentially there could be some changes to the amount of capital that's distributed among the family with the dividend policy, etc. So if you keep the company as is and you're not taking on this massive acquisition, there may be more distribution of wealth among the family. Then preservation of wealth, for similar reasons as just discussed. You are preserving the family business. You're preserving the business, the ownership of the business within the family. Riskiness, we do think, however, this could be quite a risky strategy to just keep the company as and not take on the acquisition, as this acquisition could be really important for the longevity and growth of your company as a whole. There's so many benefits, which we will discuss later on, to this acquisition, and we think if you just completely disregard this, it could be detrimental not detrimental, but it could hurt the growth of your company in the long run. And then continuity, ultimately ownership is still kept within the family and the business will continue to go on. Then lastly, the synergy solution will tick all of these boxes, and we will entail what this is now. So the synergy solution, there is 3 key steps here. The first is to maintain family unity. The second would be to conduct a business and crisis meeting. And then thirdly would be the evaluation of the DRT acquisition's timing. So I'm going to pass you off to Sarah now, who's going to look into maintaining that family unity.
Thank you, David. So as we all know, a healthy family leads to a healthy family business. So how can we help you at the roots to ensure your family are set up? We understand, some family members may feel isolated, lonely during this time. We really advise setting up structured meetings between the family members to express their concerns, worries and issues during this time. Another possibility is that your mental health, some people in the company, mental health may not be strong at the moment. We understand that maybe you're not used to this kind of setup of the current situation. However, bringing in an external counsellor can really help you during this period. We also recommend that all family members come together and they construct a well-being policy. This is really, all these measures are going to help you in the short run. Now I'm going to look into how we can help you in the long run as a family to ensure that the roots of the family are healthy. So in the long run, we think that a committee should be formed within the Family Council, specifically focusing on the mental health of the family. And perhaps some members in particular may be feeling really overwhelmed during this time, and we recommend putting them on a stress management course to perhaps alleviate any difficulties they have during this time. And also, we believe that we really advise reviewing the wellbeing policy on an ongoing basis, and perhaps different concerns should be incorporated into this in the long run. This is really going to focus on family unity in the long run and maintaining a healthy family to ensure that the business prospers in the long run.
So when it comes to the business and crisis meeting, obviously you said you do not want your short-term solutions to cause issues with the future long-term aspirations of the firm. So you need to make sure that this won't happen. So we need to set up a meeting as soon as possible so that we can align the short-term goals and aspirations with the long-term. This is to make sure that we don't change the trajectory that you currently want to go down, and we maintain it as it goes. So when it comes to the DRT acquisition, I'll pass you on to Dave. He'll talk a bit about that now.
So, is this DRT acquisition a good decision for your business as a whole? We're going to take a look at some of the strengths and weaknesses with this acquisition. So, some of the strengths is that you would have increased control over your supply chain. Additionally, you would have access to expansion into new markets, such as the health market. And then additionally, you can become an industry leader in sustainable ingredients. Sustainability is one of your core values as a company, and this would allow you to become the industry leader in that, which would be really beneficial to you. Then the weaknesses. Now, there are some uncertainties with the current climate, with COVID-19 and the pandemic, regarding the market and the supply chain. So might not be the best time for the acquisition right now. Then additionally, the family wealth distribution. It's a highly capital intensive acquisition, and again, the dividend, there might be less money to allocate towards the family members with the dividend distributions, etc. Additionally, external notes may be converted to shares. So as I mentioned earlier, if you can't meet the financial obligations to repay the loan, it could be converted into shares, which could be quite detrimental. You'd lose out on some of the ownership. And then additionally, a potential misalignment of culture.
So when it comes to financing it now or financing it in the future, we can see now you're looking at going private. However, this could cause an issue. Private credit investments for acquisitions like this don't have a proven track record. They usually go for smaller financing of companies with a less profit and size. And when it comes to acquiring at a later date, this is still uncertain, as we don't know when the BSL markets will open. However, for the investor side, it is less risky, as they do have more liquidity when it comes to their investment, and they may not be as prudent when it comes to some of the covenants. And then as well, you have already stated that you are unsure if the values do align. So this will give us more time to be more thorough with the due diligence to make sure that these investments can be put in place and can be done correctly. So with this then, we'll talk about the implementation and how can you act on some of these recommendations. So I'll pass you back on to Sarah, who'll go through the first risk and mitigating factor.
Now, we have identified that there's going to be a risk when we're going to bring in that mental health counsellor. There's going to be a cost involved, but we really believe that this is going to be key in supporting the family members during this unprecedented time. I'll pass you back over to Rory to discuss the following two risks.
So obviously you think DRT is a good acquisition, and some of you might be apprehensive that you've missed the opportunity immediately. However, we do think that a more thorough due diligence and consolidation of your financial position would be better, considering we are unsure of the times ahead. We want to make sure we have enough money in case of any other issues, as it is a very capital intensive acquisition and would be the largest in your history. And when it comes to the business trajectory, we do think this may be an issue. As you have stated, you don't think your short-term solutions your short-term solutions may cause issue in the future. And we think the business and crisis meetings will be good to make sure these are aligned and stop that from happening. When it comes to the implementation timeline now, we'll talk about how long we think all of these factors should be put in place.
Now, as I said previously, our key recommendation was improving in those communication between the family, not just now, but within the next 2 years, to really help you move beyond this, and support you through this unprecedented time. So we're going to bring in the mental health counsellor within immediately, effectively, and we're also going to work to ensure that meetings are regularly established between the family members to really support you during this time and support all family members within the firm. And our second recommendation, how long is this going to take? We're going to ensure that discussions take place within the family council, and then you're going to, within the mental health committee, discussions are going to be taking place, and then you're going to establish the policy, the wellbeing policy, within the first year. Following on from this, you can review the policy as required, and if there's any other adjustments or amendments that need to be made to the policy, you as a family can decide on this, and this is really going to support you as a family going forward. Now I'll pass you back over to Rory.
When it comes to aligning the goals of the business, we are still currently hitting the second wave of COVID throughout Europe, so we need to have a meeting immediately to align short and long-term values. We also think these need to be re-evaluated continuously so that they do stay in line, as we do not know what the future does hold for us. And when it comes to the acquisition, we think we need to continue the due diligence and relationship between DRT to see if this acquisition is viable when it comes to the financial aspect as well as the cultural. And then later down the line, within 5 years, we'd hope to finally acquire it when the financing terms are more favourable, and hopefully within 10 years pay off the credit loans you've taken out for that investment. And then when it comes to future crisis planning, we do think we need to look back on what we did well and what you haven't done well, so that you can implement a strategy for situations that may arise in the future. I'll pass you back on to Evelyn now, who'll go through some of the final remarks.
Thank you. To conclude, our recommendations aim to strengthen relationships, governance, and strategic direction. We aim to ensure a smooth transition and continuation of the Firmenich family legacy and business. And by working together with you, we can ensure long and short-term success. Thank you so much for your attention. We'd love to move forward with any questions.
Thank you. Judges will now have 10 minutes to ask questions of the presenting team. May I please ask the lead judge to start off the question and answer period.
Thank you very much for the presentation. One of the key things that seems to be driving your recommendations is a couple of statements you made early on about that you have concerns about family relationships and concerns that the pandemic will cause issues with our family values. Can you help me understand a little bit more about what you uncovered in your research and your due diligence that led you to concerns about our current family relationships and family values?
Well, when it comes on to the business aspect of the acquisition, obviously not every family member wants to do it. So we want to make sure that those visions stay aligned and there's not issues with that.
We've come to understand that between restrictions and pressures on the business concerning possible acquisitions or whatever, members of the family are stressed. There are over 40 shareholders belonging to the family, and we think it's really important to maintain unity amongst them, especially during this time when there's so much uncertainty.
Just to add there, taking on that loan right now in the present moment, there is that chance of not meeting the financial obligations with the current market conditions and losing out on some of that ownership. And ultimately, some of the family members could be quite worried that they would be losing out and diluting some of the ownership stake within the company.
So I have a quick clarifying question first. On your timeline page, you indicate that it's January 2021. Is that correct?
Yes.
Okay, so in that case, the COVID vaccine has been developed. I'm wondering why you're so concerned about the risk and uncertainty in the market when it looks like we're turning the corner on it.
Well, especially back in January 2021, especially in Europe, there was a lot of second lockdowns. So especially from our previous experience, if we're looking back in hindsight, it was becoming more rampant in Europe. So there was a lot of lockdowns then again. So especially for us, there was a lockdown, that's the huge second lockdown where people couldn't end up going to work, people couldn't work in factories, couldn't kind of do what they were doing beforehand, similar to the first lockdown. Obviously, this is a European country. We wouldn't understand the full aspects of what it was like in the USA at the time, but in Europe, there was still concerns when that second lockdown did happen during January 2021.
Understood. And so in this instance, then, you're recommending to push off the acquisition. How are we protecting our business in the short term other than hiring a mental health counselor for the family?
Would you just be able to clarify just that second part about the business and the family aspect? Sorry, apologies.
Yeah, just it seems like the only short-term recommendation that you've provided is to hire a mental health counselor. Is there anything else that we should be doing to protect our business?
Well, when it comes to the business, you've already done very well with the previous short-term aspects you have put in place. But however, you do think that some of them may cause issues in the long term. So you just want to make sure that those values are aligned. And it would be more so your decision on what aspects you think would best prioritise that trajectory that you do want to follow down.
Can I just add in on that as well? It's not just a counsellor we're bringing in. We're going to establish the family meetings as well to really enforce that all the family members are comforted during this stressful period in time.
A follow-up to that, looking at your implementation timeline, I see you're spending time on communication, counseling, also mental health committee, but still like just a little bit on the business. So what else do you have in mind? How can we operate? Is there something we can do in the meantime?
It seems that you're working really well in the current present moment. However, we do acknowledge that there is market difficulties. We feel like in the long run, this is our implementation. This is what we believe could happen in the long run. But currently, you're doing really well, and we want to emphasise that that in the long run, this is what we can implement.
Obviously, when it comes to some of your things or some of the aspects you have been going through, you have continued to buy up supplies and still operate. We're unsure if this would still be the case, continuing as we don't know what will be happening. So we really want to make sure that you are aligned in what, if you want to go down the survival route or continue with your social responsibilities and agreements you have with your suppliers, considering you have been continuing to buy up supplies for the different fragrances, ingredients that you do have in the different products. So it's we just want to make sure you align and decide what aspects you think would be the best to go down in the future.
I'm on the synergy solution with respect to the DRT acquisition. It sounds like you still want to do the DRT acquisition. You still think it's viable, but
yes,
you want to wait for viability of financing, and the financing viability. I seem to think you're worried about the dilution of the 100% family ownership. Why? So what? What if we only had 90% or 80%? Why is 100% family ownership so important in the DRT acquisition?
So when it comes to that, you've obviously had the business in your family for the last 125 years, and a lot of you really want to keep it 100% family owned and make sure that those social aspects are still there. So we just want to make sure that they will stay there and there won't be any outsider, say, people in charge that disagree with those aspects of the family values that you have implemented into the company, along with the sustainable aspects and D&I and the different implementations you've put in place, so that you.
But don't you think that, I mean, I have a 30-year relationship with DRT. I know they're into sustainability. Do I really need to be 100%? Can I maintain those social values with like 10% less or 20% less?
When it came to that with DRT, we'd be buying out DRT, and those different values wouldn't be with DRT, they'd be with the external investors. So with that, we've already you've stated that the values may not fully align, and that's why we think we need to do a more thorough due diligence to make sure that they are still there. Because what we don't want to happen is you take over or you acquire DRT, next thing we know, the values don't align, it doesn't work out, there's a very big issue then. And would it then be a good decision to, say, not go through the proper channels? And say, for example, an issue like RGR Nabisco, where it was taken over, the takeover didn't go well, a lot of people lost jobs and a lot of money was lost. We want to make sure that the due diligence is done correctly, and that we know that it's viable when it comes to the social aspects as well as the financials, so that we're not struggling then in different aspects further down the line.
If I can build on that, protecting the 100% family ownership structure of the company is important as well, to protect it for future generations. They've built up such a fantastic legacy over 5 generations, 125 years, and we think it would be a shame to let go of that now.
So when we think about the DRT acquisition, we've already negotiated with them. It seems they want to exit. Why do you think they'd be willing to wait longer for someone to acquire them? And what's the risk if somebody else comes on and acquires them?
Well, obviously there is a risk if someone else acquires them, but we just really need to make sure that the deal is viable. We don't know if it will be a correct cultural fit. We do understand that we do deal with them a lot, but we think that it is better to, say, wait and make sure that it is correct, and it still is a very risky decision as the due diligence hasn't been done fully yet. So we just want to make sure that we would be willing for yourselves to miss out on that, to make sure that there's less issues then with the core business and the family aspect then.
As you acknowledge, though, I mean, we've done business with them for 30 years. We have several joint ventures. How big of a cultural mismatch could there be?
Obviously, it's a tough question, I must say, considering we haven't done DRT ourselves, but we just need to make sure that depending on what they do, they are obviously very involved in their own sustainable aspects, and that's why we think they're a very good purchase. However, we don't know enough about their management situations to clarify that. Will these situations be split in together, similar to Amgem and Horizon, where Amgem bought out Horizon quite recently? They had a very good relationship together. However, when it became to the cultural fit hasn't been doing very well, and a lot of people have been forced to leave due to the current manner in which Horizon differs from Amgem. And we want to make sure that that doesn't happen, as Amgem are currently going through a lot of issues when it comes to expensive redundancy packages and external financial costs that don't necessarily need to be done just to get a more consolidated position in the market that they were in.